man, we just take a trade on a breakout. It's just a continuation chart pattern. You take your trade, stop loss below, and you smash it all the way up. So hello, what's up traders, welcome back. This is First guys. As usual, we are here with a new vibe, with a new thing, and gonna help you guys. As you know, we are price action traders, and today guys we got to show you some basics on price action. So today guys, you got to look at chart patterns, and these chart patterns, of course guys, we have been covering some, and of course today we are starting a new course on chart patterns. So for more, just what you have to do guys, just like, follow for more about chart patterns, and we cover this course. We see one next. So then we got to look about how market moves, guys. Of course, you know that every impulsive move always has a correction before it goes up. So guys, you know that every impulsive move going downwards, it always have a correction before it goes down, correction before it goes down. And of course, you know very well that we don't sell here, we sell above. When we are selling, we don't sell below, but we sell above. We don't buy below, we don't buy above, below. So today guys, we got to look on how we can catch our moves. Of course, you know that we are trend following traders, so today we got to see some of the chart patterns. Today guys, we have got some good different chart patterns in the market, of course. And you know, we have wedges, flags, rectangles, triangles, head and shoulders, pennants, double taps, triple taps, 1 2 3 chart patterns, so many others. I may not finish them all, but let's look on how we can get these chart patterns. Of course guys, you know, let me explain something about wedges. Wedges, of course, these wedges guys, you can find them in a training market, and they can work as continuation and reversal chart patterns. But of course, you know how to find them, you'll know how to find them, and you know how to use them in both sides. So we have flags, continuation chart patterns. Of course, we have rectangles, you know, this is more market moving sideways, and also for them they are also continuation chart patterns. We have triangles, we have head and shoulders. Head and shoulders, they are both they are not commonly known as reversal chart patterns, but they can also work as continuation chart patterns depending on how the market structure. We have pennants guys, we have double taps, we have triple taps, 1 2 3 chart patterns. They are many, and I may not finish them all. So guys, today let's see, we got to see about this is something good, which is a pattern which is called the triangle chart pattern. Of course, you can see very well that this is an ascending triangle, and an ascending triangle guys, of course you know it very well that when the market is moving impulsively going up like this, of course we just wait to see what's going on. When it starts forming our first high, we wait for it to come and break at least, and we take a test, or we're going to see at least if it makes any continuation chart patterns for it to give us a continuation going with the trend. And now when you see here guys, the market is moving sideways, giving us something like an ascending triangle. And of course, an ascending triangle, you know, we take a trade on the breakout or in the breakout and retest, and we move all the way up or all the way down, going in the trend, following the trend. So guys, let's see in the real market how an ascending triangle or a triangle chart pattern looks like. So when we come here guys, I already indicated very well our ascending triangle. You can see very well that the market was moving from down going up. It reached this point, it came back down, and when it was going back up, we're just waiting to see at least if it breaks this high, we take if it breaks, you wait for a test, and we take it, of which guys it failed, coming back down, and it came back up, it came back down. So what did I see? We just see something like a holding support trend line. We also have a holding resistance somewhere here, and this is our zone. So what does this show us? This shows us that this market has formed something like an ascending triangle, and an ascending triangle, of course, they have a good chart patterns. Now when you see here very well guys that the market came and failed to retest or break it again, to try to come back down, and unfortunately did not even touch our holding support trend line. It came and broke our holding resistance zone. And when it broke this guys, most of the traders, and I myself, sometimes they can take this trade depending on the momentum of the market. So you can see very well, let me first remove this. You can see very well that the market broke it. It had a breakout build up which was happening here. You can see it attempted once, it attempted twice, and on the third time it broke out. This is a very good breakout entry. So when it broke out here, just take your trade and stop loss all the way to this strong low of the pattern. And what was the target? We target all the way above. So sometimes these markets might break and not return back, and you can see how the market went all the way up. And so let me show you another entry that happened here. If someone missed this entry, how are you going to get another entry, guys? Sometimes it happens for these patterns to break and retest, but sometimes it doesn't happen. So if you're a breakout and retest traders, that means you're going to miss some trades. If you're a breakout trader, that means you're going to lose some trades, because sometimes the market can fake out and come hit your stop loss, and sometimes it can just break out, it follows your entry. So when it broke out, guys, we got another entry somewhere here, as you see very well. Let me get for you. And when I see this is a flag chart pattern, this is a flag chart pattern. So when you just put there holding resistance line, and you got to see, guys, another holding support trend line. So when I see this, guys, of course this is a very good indication for me that this is a flag chart pattern. So for a flag chart pattern, of course, you know how we smash it, man. We just take a trade on a breakout. It's just a continuation chart pattern. You take your trade, stop loss below, and you smash it all the way up. So this is how you can trade an ascending triangle. Another pattern that I've got for you guys is a falling wedge chart pattern. A falling wedge chart pattern, I've told you before that it is just a pattern that it can work as, of course, a continuation and a reversal chart pattern. So for now, guys, you got to look at it as a reversal chart pattern, and of course it is a reversal. Falling wedge is a reversal when it is formed in a downtrend. Okay, so if it is in a bearish trend or downtrend, and we got to notice that it is forming a wedge, the market is forming a wedge pattern, and we just know that a market is about to reverse. So that's when you start thinking of taking profit or moving your stop loss to somewhere to protect your account, just in case the pattern is not valid, it's not valid at the end. So what happens when we see, guys, a falling wedge? Of course, we get some touches, like a first touch, both sides touches. You can see this is our third touch, the third touch of our holding resistance trend line. We got also our fourth touch of our holding support trend line. And when we get a breakout, you can take a trade from here, and also you can also, if you are a breakout trader, you just take your trade, and of course your stop loss might be somewhere here. So if you are a retest trade, you just take a trade somewhere there, and of course your stop loss should be in the middle or somewhere here. So depending on how the retest happened. When I look at this, I just say it's time for me to take a trade after getting this breakout. Okay, so after getting a breakout, you just wait for it to come back and you go all the way up. So let's get it into the charts and we see what will happen. You can see very well that this market was on a downtrend, a very strong downtrend was coming down, and when it was coming down, we got a pull up, we got a pull down, we got a pull up, we got a pull down. So this was our first touch, second touch, third touch. Okay, this was our first touch, second touch, and on our fourth touch, the market came and tried to break out. Of course, if you're a breakout trader, guys, this is where you think of getting an entry. Of course, guys, I always recommend you that a reversal chart patterns always wait for a test. Continuation chart patterns, you can take a trade after a breakout. But with reversals, of course, most of the times we normally face fake outs. Okay, so with fake outs, you can avoid them as waiting for the test. If the market goes away without looking down, looking behind, don't worry, you can get a continuation pattern inside that trend. Of course, you know, when we are following a trend, we always get continuation patterns for us to give us entries. Okay, we don't just jump into trades. So when we look at this, guys, you can see that the market was going up. It broke out. Of course, most of the people and some people took this trade, but I myself recommend you always to take the test of reversals. So you can see that the market came back down, and when it came back down, you just get something like holding inner support. This is the inner support. You just see what is really happening. If the market breaks this one, that means a wedge is still valid but has not yet confirmed the breakout. So for me, my best entry, where should it be? Of course, you can see that we have the zone which is holding the market somewhere there. You can see that it gave us our first touch somewhere here, second touch, and here it has failed to break it. This is our third touch. For me, my entry where to be, guys, I just wait for the market to come and break this holding resistance that they want, because this resistance here, it has failed to break, which was a support, and now we just wait for this resistance to be broken so that we can take a trade. And very well and good, guys, you can see that the market came back down, it came up, and when it came up, this was to be my entry. You just put your entry, you enter the market somewhere there, you put your stop loss below this inner support that was formed in the market or in a falling wedge, and you smash the market all the way up. So why is that take profit? Of course, the take profit, you always look the market structure. As you can see, this is a very strong holding resistance that was formed by the market. You got a first touch, second touch, and third touch. Also, we expect some reaction when the market reaches here. And now this is our take profit, and of course you can see that the take profit is hit successfully within a meantime. And you see very well that the market went reach here. Yes, fine, it broke out, but it had some pause in the market. Of course, when we see a pause, that means there's a lot of take profit which is going on, and there's some entries which are coming in. So we don't know which is going to happen. We just watch the market to see what is going to happen again. So next we got a flag chart pattern, guys. So well, with the flag chart patterns, you know that a flag chart pattern is a continuation pattern, and whenever you see a flag in a trending market, you just mark that that flag is in which form. If it is in a bearish form, you just wait for the market, for the flag to complete its cycle, and you take a trade on a breakout. You can see that the market was moving downside. The market was moving downwards strongly, and it started forming my retracement, which you see that is coming like a flag. And when we see a flag, what do you think of what comes into your mind? You just wait for a breakout, and you take that trade all the way down on a breakout. And after breakout happening, just put your stop loss above the flag and take profit all the way to the next possible reversal of any reactions on that. So guys, when you look at this, what comes into your mind? Of course, you just know that we have marked our flag, and the flag is a very good pattern that I like most and I trade most of the times. And those in a Telegram channel, you already see that I normally spot flags and I trade flags. So when I come here, man, what I see is a bearish trend that is moving down, and still going down. So when it started guys retracing, I just got to see something like a flag pattern. Of course, when I got to see this flag pattern, I was like, it's time for me to make some good money. It's time for me to make some good money in the market. So I just got my first touch here, second touch, third touch, and I also got my first support touch, my second support touch, my third support touch, and you see guys, the market started giving up, started building up for a breakout. And when I saw this building up of a breakout, guys, this is the time you can just give this chart more attention, because you know that anytime a breakout is happening, why? Because it has started consolidating around the support zone. If it was consolidating above here on the resistance zone, guys, we just expect maybe this flag to be disrespected by the market. But if it is consolidating on this holding support zone, we just know that anytime, any hour, any minute, this market is going to break, and this is the time for us to buy, to sell this market. So very well and good. You can see that, guys, it formed here a double top. It formed a double top, and on a double top it broke its neckline. Of course, this holding support of the flag, it is the same time as a neckline of a double top that it was formed. And after that, guys, the market broke this. It broke its support. And after breaking the support, this is the time you just think of getting in the market. You stop loss above and you'll take profit. You just look down and you see where to put your take profit, guys. Well and good, and our take profit is hit. So you got to know something, that sometimes your stop loss may not be hit, but you always look for the ways to get money out of the market. So you just look at the charts, you just see how you can get trades. You can just see how anytime, anywhere, reversals may happen. So here it's a good thing how you can look into the charts, guys. You always look at the charts and you always search for patterns, okay? Because now if you see a falling wedge and you're in the trend, what comes into your mind? Of course, you're just thinking of take profit, man. Even if your take profit is hit, but you just think of taking profit, okay? You just think of closing trades, because you already seen a falling wedge in a bearish trend. And of course, a falling wedge in a bearish trend, it is a reversal chart pattern, okay? After marking that, you're just thinking of closing sales trades, and you just wait to see to get a confirmation to get buys, okay? To just go with the bulls, because bulls may come in the market. Okay, guys, thank you for watching. That's all that I got today, guys. You just look at 3 chart patterns. So let's see next time how many we gotta look at and which ones should we cover. Okay, wish you the best. Like and follow, subscribe this channel, man.